about a third in sources, which were generally Australia, New Zealand, Canada, Norway, those types of stocks, some in South Africa, even some U.S. stocks. And a lot of that gold and energy, stuff like that. Since the euro crisis, since the bailout of Greece, we've pulled Europe back smaller and we've increased Asia. But I mean, that's basically the mix. I think you really want to overweight the Chinese story, those emerging markets, Singapore, Hong Kong, Southeast Asia. We have a little bit, in our bond, we have some of the Eastern European countries a little bit that are not part of Europe.
So if the credit boom is still trying to grow, what will happen as credit contracts?
Well, credit's going to change. I mean, remember that a lot of the world's savings are being diverted by U.S. treasuries, mortgage-backed securities. So I don't think credit is going to contract in China. I think real credit is going to expand in China. Because if the Chinese aren't buying our bonds, what are Chinese savers going to be doing with their money? I mean, I think there are going to be more loans. The problem is, how is the credit allocated? Right now, it's very easy to get credit if you're a bank. But it's not so easy to get credit if you're an entrepreneur trying to grow a business. And so what's going to happen is credit's going to get tighter for the bankers, but it's going to be more available for businesses, particularly businesses in places like China. And so I think it's going to change, and it's going to be ultimately real credit. Credit has to come from savings. Credit has to come from under consumption to be real. If the government just print money, it's just an inflationary illusion. So I think that as this changes, it's going to be a big improvement. But it's not going to be all the speculative money. Credit is going to have to finance real businesses so that you can pay off, because rates will be higher than they are today. And therefore you're going to need real production to pay off higher rates. Most of the financial leverage and speculation is possible because rates are really low. But if rates were to rise, it makes it a lot higher for the financiers to make money. But real businesses can't.
So, do you think it's wise for Canada to allow foreign investors to purchase material domestic commodities?
Yeah, I mean, to the extent that all of your companies were bought up by foreigners, would that be a good thing? No. But if Canadians want to sell off their assets, I don't think the Canadian government should say that you can't do that. I think people should be free to sell their assets to whoever they want. At whatever price they want. So I don't think the government should come in and say, you can't buy this, you can't buy that. But I think that over time it would be a sign of weakness if all of Canadian companies ended up being owned by the Chinese or But I don't think that would be the case. And of course, Canadian companies are making acquisitions abroad as well. It's not just a one-way street. And so you can't just look at what are the assets that foreigners own in Canada. You need to look at what are the foreign assets that Canadians own around the world and take a look at your net position. Are you a creditor nation? Is your net position improving? But ultimately, if you're selling off your assets, it's like somebody has a farm and they're selling off their chickens and their roosters and their cows. Pretty soon they're not going to have a farm anymore. They're going to be sharecropping. So yeah, it would be a good thing. But yeah, I mean, wouldn't it have been so terrible if PhD had bought potash?
And the last question here: what are your favorite currencies currently?
Well, the ones that we're buying, I do like the Canadian dollar and the Aussie dollar and the Swiss franc and the Norwegian kroner and the Singapore dollar and the Hong Kong dollar and RMB, the currencies we kind of avoid. We have a little kind of avoid the euro, the pound sterling, the U.S. dollar. Don't really have much in Latin America. We do have a few Brazilian stocks, I think, in our mutual fund now and in our managed account. But we don't really have. I think we might even have. I think we have some Brazilian real in our bond fund. We also have a Polish zloty in there. And then, I prefer gold and silver to anything. And when people like to talk about gold is now becoming a currency, it's not. It's always been money. It just hasn't necessarily been utilized as money. But currencies are money substitutes. And, there's nothing like the real thing. Currency is supposed to be backed by money. When it's not, it's all here's what we have. Legitimate currency is backed by real money. And so the reason that there's a preference, it's not becoming an alternative currency. It's always been money, and it's always been a better alternative than currency. It's only when currency has been backed by gold that it's had any real value. When it's backed by nothing, it has no value. It's just all fake. And faith, people had faith in Bernie Madoff, and they didn't. So it can change very quickly. So I'd rather not have money that depends on confidence. I'd rather have it depend on its intrinsic value.
Okay. Well, thank you for that. Just a couple of quick things. If you want to learn more about Peter's thesis, ongoing thesis, and commentary, our website is europac.ca. That's updated frequently.
And that's pretty much the same website. If you